I was reading BSA, AML, and talking about the BSA program requirements for credit card system administrators. A. Operators of credit card systems must develop and implement a written anti-money laundering program reasonably designed to prevent the operator from being used to facilitate money laundering and the financing of terrorist activities. Operators, Roman numeral 1, must be approved by senior management. Roman numeral 2 must make the programs available to the Department of the Treasury or a federal regulator for review. Letter B. Policies, procedures, and internal controls. These are requirements of credit card system operators. Policies, procedures, and internal controls are designed to ensure that the operator does not authorize or maintain authorization for any person to serve as an issuing or acquiring institution without the operator taking appropriate steps based on a risk assessment to guard against the person issuing the credit card or acquiring merchants who accept the credit card in circumstances that facilitate money laundering or financing terrorist activities. Roman numeral 2, ensure that the operator is in compliance with all applicable provisions of the regulations implementing the monetary instrument reporting and record-keeping requirements of the BSA. Roman numeral 3, ensure that a designated compliance officer will be responsible for A. the effective implementation of an anti-money laundering program, B. the updating of the anti-money laundering program as necessary to reflect changes in risk factors or the risk assessment, and C. training of appropriate personnel. Roman numeral 4, provide for education and training of appropriate personnel concerning responsibilities under the program. And Roman numeral 5, provide for an independent audit to monitor and maintain an adequate program. Letter C, requirements for credit card system operators. For purposes of making the risk assessment, the following persons or entities are presumed to pose a heightened risk of money laundering or terrorist financing. That is, Roman numeral 1, a foreign shell bank. Roman numeral 2, a person appearing on the OFAC SDN list, Office of Foreign Assets Control, specially designated nationals list. Roman numeral 3, a person located in or operating under a license issued by a jurisdiction whose government has been identified by the State Department as a sponsor of terrorism. Roman numeral 4, a foreign bank operating under an offshore banking license, other than a branch of a foreign bank that has been found by the Federal Reserve to be subject to comprehensive supervision and regulation. Alright. Roman numeral 5, a person located in or operating under a license issued by a jurisdiction that has been designated as non-cooperative with international anti-money laundering principles or procedures by an intergovernmental group or organization of which the United States is a member. Roman numeral 6, a person located in or operating under a license issued by a jurisdiction designated by the Department of Treasury as warranting special measure due to money laundering concerns. Section D, Edge and Agreement Corporations. Edge and Agreement Corporations must have written BSA compliance programs that have been approved by the organization's board of directors and noted in the board's minutes. Section E, branches of foreign banks. Except for institutions that have deposits insured by the FDIC, a branch agency or representative office of a foreign bank must develop a written BSA compliance program that is either 1. Approved by the foreign bank's board and noted in the minutes, 2. Approved by a delegee acting under the express authority of the board to approve the BSA compliance program. Alright, we are in section 3 now, large currency transaction reporting requirements. which is great that we're moving quickly, because reading the summary of the regulation by Alex Information is almost 200 pages, so this is a nice little break. CTRs involving more than $10,000, the interagency examination procedures, and Code of Federal Regulations, Chapter 31, Section 1010.311 are about this. Calling it FinCEN Form 104, the CTR must be filed on each deposit, withdrawal, currency exchange, or transfer by, through, or to the financial institution involving more than $10,000 in currency, including A. Cash exchanges, for example, $10 bills exchanged to $100 bills. Order, savings bond, and so forth, meaning that even if I put $10,001 in my savings account and then effectuate a wire transfer, that I have to be reported upon. So you're going to need to, in order to identify that activity as a bank, you're going to have your tellers tell them to deposit the money into their account or whatever in order to track that, however your system tracks it. 2. Information on all persons or entities conducting the transaction and all persons or entities receiving the benefit of the transaction must be completed, including A. Verification using state or government issued ID, including alien identification cards, and B. Physical address, and C. Specific occupation of the conductor. Multiple transactions on the same day will be treated as one. And a report must be filed if the institution has knowledge that the transaction had been made by or on behalf of the same person and total more than $10,000 in currency. It's pathetic that it looks so bad in this light. Deposits made at night, every weekend, or on a holiday are considered transactions on the next business day following the day of deposit. Did I talk about multiple transactions on the same day will be treated as one, and a report must be filed if the institution has knowledge that transactions have been made by or on behalf of the same person and a total more than $10,000 in currency. Now, they don't get reconciled, like deposits and withdrawals now. It has to be 10,000 in withdrawals, 10,000 in deposits. So it's not just that $10,001 was deposited and $10,001 was withdrawn, so nothing happens. No, you have to report that. Number 5, CTRs must be filed within 15 days, 25 days for magnetic media or electronic filing, following the day that the reportable transaction occurred. CTRs are filed with the IRS. And A. Submit CTRs to the IRS Detroit Computing Center or local IRS office. B. The IRS encourages electronic filing or filing using magnetic media. And 7. If the bank has failed to file CTRs on reportable transactions, the bank should begin filing them and contact the IRS to request a determination regarding whether the bank should begin backfiling unreported transactions. Alright, it's now required as of like March 2013 that CTRs are e-filed. So this is also old data information, that is. Section B, exempt persons. Number 1, designation of certain exempt persons. A bank must designate exempt persons except for the Federal Reserve banks and U.S. or state government entities by filing designation of exempt person within 30 days of the first reportable transaction with the person seeking to be exempt. There is no requirement to file a CTR on any exempt person or on any transaction to or from any of the 12 Federal Reserve banks. Types of exempt persons. Banks to the extent of their domestic operations. Exempt operations. Types of exempt persons. A. Banks to the extent of their domestic operations. B. Departments or agencies of the United States or any state or political subdivision. 3. Any entity other than a bank where common stock or analogous equity interest is listed on the NYSE or the American Stock Exchange, or whose stock or equity interest has been designated as a NASDAQ national market security listed on the NASDAQ stock market, except for NASDAQ capital market issues, provided that any financial institution other than a bank may be exempted only to the extent of its domestic operations. To the extent of its domestic operations, non-listed businesses that Roman numeral 1, have maintained transaction accounts at the bank for at least 2 months. Roman numeral 2, frequently engage in transactions in currency with the bank in excess of $10,000. Frequently is defined as 5 or more cash transactions in a 12-month period. And Roman numeral 3 are incorporated or organized under the laws of the United States or a state and are registered and eligible to do business in the United States. 4. Are not engaged in business that is on the list of ineligible business activities. And F. Payroll customers solely with respect to withdrawals for payroll purposes from existing transaction accounts. If the person 1, Roman numeral 1, has maintained transaction account, okay, this is the same 1 through 5, and again, you know, you have to be a customer for 2 months. You have to be doing frequent, at least 5 or 6, $10,000 in transactions in a 12-month period, incorporated or not involved in an eligible business if you're a payroll customer. We'll live. And last but not least, an American business. A bank may exempt a non-listed business or payroll customer that has not had an account at the bank for at least 2 months if the bank conducts a risk assessment of the customer and determines that it is a legitimate business reason and for conducting cash transactions. You've got an annual review. The information supporting the status of exempt persons that are non-listed businesses or payroll customers must be reviewed and verified at least once each year. The system of monitoring for the continuing eligibility of each customer must be reviewed. Special rules. I'm going to pick up here on page 783 in just a moment.